So let's start with the need for these digital virtual banks, right? If you look at through the lens of governments, through the lens of customers, and through the lens of the broader ecosystem, what's really driving this need for digital or virtual banks? I'm keen to hear views from Wendy to start with.
Hello. I think our Asia story is very much about the unbanked and underserved, right? It's very clear, right, in terms of both what's happening in Hong Kong and Singapore. They are, we're looking for what are actually points of difference. But I think what is also interesting is that all our players are also saying, how do we actually leverage this from a regional perspective, right? Because highest growth, we've all talked about moving from west to east, north to south. So as a result, what is it that these opportunities actually give us when we've got rising incomes and rising volumes of where populations are going to go? So I think that's actually really interesting. I also think what I would make the play in terms of the retail versus wholesale, right? Because I think that there's been quite a lot of disruption happening in the B2C space, but it's flowing on through to what is happening in B2B, and that is actually also very ripe for disruption and what virtual banks can actually do with new technologies to actually serve, again, a more complex set of needs.
So if I try and unpack that, right, and you look at the capital requirements across Asia Pacific, you have the narrative. We were talking with a few folks earlier. The narrative in Taiwan was, depending on the exchange rate, 50, 60 million is as the capital requirements there. You look at, this was the number in Hong Kong. Similarly, when you look at the number in Taiwan, a different set of capital requirements. When you look at the number for full service banks in Singapore, we have a huge capital requirements here. And a slightly different story in UK and rest of Europe. So I'm curious, Louis, do you think this need is so big that there's these huge range of capital requirements, right from 1.5 B in Singapore to 50, 60 million in Hong Kong and equivalent numbers in between?
So I think you asked the need for these digital banks across 3 dimensions. And I think from our regulator and from the UK, and with the UK being the leading, I think jointly, but maybe just ahead or just behind Singapore, let's put it out there, FinTech hub of the world. And a regulator that has been, like your regulator here, very proactive and on the front foot. And one of the things we were seeking to do was to unstick the fact that we had very little competition, true competition in the UK market. We'd invoked switching policies to try and get people to easily move banks. That was an abject failure. People didn't move. There was no 10x differential in the services they were being provided. And so it was very stuck as a country. I think when you then say, well, 1.5 million of the UK population are unbanked, underbanked. For an advanced economy, that's still a huge amount of the population that is underserved. They weren't being served in the right way. There was this lack of switching and lack of competition. That's why we wanted these digital banks to be set up and to increase the competition. I think from the consumer's point of view, and I think that's true everywhere, they had got used to it being a utility. And so, yes, they absolutely trust the banks, and the 2008 crisis gave a real understanding of what they trust the banks for, and it is to keep their money safe, but they don't trust them to actually deliver a relationship at large in the UK. And so this was very much about engaging with the consumer, allowing them to have the services delivered to them in a way that other services were being delivered in their lives.
Right. Just to follow up on that, Louis, I mean, if you look at the narrative, especially from a liability play in the UK, with a lot of these neobanks, and there's different taxonomy that's being used to describe them, has that liability shift happened at the pace the market expected it to be?
No, I don't think it has. I think everything's been slightly slower than it was expected. I think the regulatory moves that we've made, the great announcements and PR and what's been happening. But when you look behind some of the real success stories, when you look at actually what has shifted in liabilities, it's much a slower story that's coming through.
Right. And Andy, just reflecting on those comments, right? If you see the UK story and how that has played out, and the liability story hasn't shifted as many expected it to be. On one hand, on the other hand, when you look at the valuation of a lot of these digital banks, right? You could argue some of these digital services businesses were valued at a certain price point. Now we are hearing, some of the big neobanks valued at $1,000 per client kind of evaluation, some unforeseen numbers, right? So just want to get a sense, given you are in this process, you're in the midst of this, you've seen the UK story, how that has not necessarily unfolded. What's driving this excitement towards digital virtual banks?
It's interesting listening to the other two speakers, and Louise particularly there. I think Australia is sort of following the leader. And if I just paint the context of Australia for a second, there are 4 large banks in Australia that dominate, and on a number of measures, 80% and more of the market dominated by the 4. And then you see the unprecedented use of mobile banking coming through or mobiles in terms of the millennial market, etc. There's clearly an opportunity to break or to try to break that oligopoly of the banking system using the digital banking as a means to do it. There hasn't been a new bank in Australia for 27 years, up until about just over a year ago, when the first of the new banking licenses was issued. There has now been 4 new banking licenses. We got the 4th about 5 weeks ago. I think the 3 that it's very early days, but I think what's happening at the moment, people are taking the accounts out with them on a test and see, and to gain confidence around what the experience is like, with the hope that we can entice their full banking services over to us as they gain confidence in what it is we have to offer. There's no doubt, though, there's demand, and there's no doubt that the reason for where we are and the popularity around how we've got to where we've got is on the back of, unfortunately, there's been a sort of banks and I've been in them, so I know, they've lost a little bit of sight as to why they exist, and they've lost the belief or the trust of the consumer. So there's a following wind here to allow us to get into that space. What we've got to do is get in there quickly with good propositions that offer a great experience, and bring people over as quickly as we can. In terms of the valuations that you touched on, who knows if those valuations are right? I think they're very undervalued, quite frankly.
You must be a digital bank.
No, we just need more capital.
So Sam, given your background, right? I mean, you were formerly with a private equity fund, and an ex-consultant, and building this entire narrative as a pan-Asia fintech. I'm curious that you didn't jump into that bandwagon. Let me also create a digital virtual bank, given all the needs that came up and the size of problems that were highlighted earlier. Why is that? Did you feel that a lot of these digital virtual banks might end up as a hobby bank? Let's keep some hobby money aside and use that for some fun stuff. Did you feel that we might see another WeWork kind of a saga with these digital virtual banks, given how the valuations are skyrocketing? The valuation of digital bank per client is way more than PayPal and Facebook. So curious to hear your thoughts.
Yeah, there's a lot to that, a lot to the question. Look, our business, Compare Asia Group, we're an independent, consumer-focused business to help people figure out their finances. And so we come at everything from a consumer lens. And what we see with the evolution across our markets is that the innovation that's happening is happening slowly in general, and it's leading to more confusion amongst our users. So what does that mean? So we consumers come to us to understand their banking and insurance needs and products, and we help them figure that out and then distribute those products to them. And what we see is, one, the pace of innovation is really slow. So though there's lots of talk about digitization from within the FIs, though there's the open API regulations, which are moving at various paces, when we look at the reality of how the user journeys actually evolve and how the user experiences actually evolve, one is it's evolving very slowly. And so all of the talk and the hype around what can happen, while it is very exciting, is still quite removed from most people's actual experience with finance, right? So that's kind of our one starting point, is there's more confusion that's coming or that's happening, and further innovation is just leading to more confusion. And so if we then look at what's happening, and so how do the digital banks impact that? Well, if we take Hong Kong as an example, since we're a little bit further, have a few extra quarters of insight, right? What we see is that consumers already have relationships with half a dozen banks, and we all already have a few wallets, digital wallets as well. Now we have 8 virtual banks coming into the market. We have digital insurers coming into the market. And so fundamentally, the need that we saw was not for a 9th digital bank. It was to say, this is just leading to more confusion for people. And so as we have the traditional FIs, some of whom are starting to really innovate more, quite quickly with interesting solutions, as we have the digital banks bringing all of these solutions to markets, for us what that highlights is the need to, again, be there as a trusted, impartial, objective source of information to actually help people figure out what their financial product portfolio should look like. And so for us, it comes to that consumer-focused lens, which says if we're there as that trusted, impartial company that can help people figure it out, that's actually the need, not a 9th digital bank or a 6th digital bank across the different markets.
Right. So given that sentiment, right? A, there is a big need. B, there are bigger needs to solve for than launching another digital virtual bank. And if you reflect on the last 3-5 years, quote unquote, the modern history of digital virtual banks, Wendy, from your perspective, what has worked well? When you look at digital virtual banks around the world, what has worked well for them?
Can I just maybe start off also, maybe just because I think we've been reflecting on the virtual bank story, and I think there is 2 parts to the story. One is actually about existing consumers having more choice, right? Which I think is the Australian story, to some extent is the UK story, which is quite different, I think, from our Asia story. I just want to because I think that caused a different level of risk and marginal assessments, right? For us in Asia, I'm very familiar with Australia and New Zealand, but we are looking for unserved and where we have no choice. Our customers currently now do not have a banking product. I work with FN, and so and even what Maz is doing here today is looking for hard to serve, and no one's serving them. So our risk profiles, the way we think about, again, our capital, I think is quite different from when you're competing amongst, well-served, but again, underserved potentially, but they're well-known, right? So I just want to maybe sort of really tease that apart, a little. And I think that in some ways, this actually is a really interesting proposition in this side of this world, because what it is that we've got new tech fins in particular coming through to our community here. And I was saying to Louise, I think the business case for these tech fins are not about banking, right? It can't be about banking, because who wants to, I don't know about the audience here, but I don't know anyone that really wants to be a virtual bank, because our capital requirements are hard, it's hard to serve. And in Asia, we've put a marginal segmentation on top with the risk. You should get a risk premium, related to that. So I actually think that the proposition here is actually quite different. And although there are lessons that we need to be able to learn around success, which is really around customer and understanding customer, all those good things that come from the technology world, I think in this part of the world is actually slightly is a twist to that. I'm not served today. I am considered to be marginal because of the way that our credit decisioning processes, or the way that I don't have banking history, and how then do I get access to new types of banking products? That's what I think is going to be different.
Right. So it's an interesting point you make there, right? On the different narratives or the different sets of problems to solve for in the developed world versus many parts of Asia. But is it too expensive a game, Wendy? When you look at the capital requirements of 1.5B as a case in point, is it too expensive a game to play and solve that problem? Which is why you look at certain types of players with certain pedigree playing that game versus bringing in the full firepower that might be out there.
Yeah, and maybe I have to caveat. This is Wendy's personal opinion rather than Deloitte's, right? So, because I do think it is a really expensive game. I don't understand how, again, clearly we can do a proposition for our customer, and our virtual banks are making that cost to serve much lower. That's a given. And they're tapping into the existing ecosystems of the parent in order to actually touch their customers. But if you then think about, again, one of the large other costs to serve is our access to wholesale, our wholesale rates, right? I mean, unless we can, again, talk about, I'm concerned about the ability to actually back, and I think a lot of our technology clients do not really understand what it takes to be a bank, right? And I think, you had some questions about talent. I think that is one of the things where banking is quite special, right? Because of the way we protect and the way that we actually need to, our risk and compliance. So as a result, I think that understanding makes it quite different, right? Again, in our more established markets, I think there's a good level of understanding, and you're competing with known customers. You're just going to serve them. That's truly a need, that you're switching. But I think here is different, and I think capital is going to be a problem.
Right. So Louise, given the journey in the UK and many parts of Europe has been a lot longer, a little bit more digital history there. What do you think has not worked well for these digital virtual banks in Europe?
So I think the whole PSD2 and open banking was much, much slower, and the benefits they all expected out of that did not come and continue not to come at the scale that people wanted. So I think that hasn't worked so well. I think to contrast what Wendy was saying, a number of them have started off not as a whole bank. They've started off doing something really well that the incumbents were struggling to do well. And they've moved to be a whole bank. And in moving, as in then trying to, going from a payment card to get a full current account to then to move to lending, what they've seen in that journey is the costs come down. So the model has the challenge of, is it a revenue model, is it a profit model? Now, they're all posting really good growth in customer numbers, and that's really exciting. They can then talk a revenue story with that, but when you get to profitability, then suddenly the story isn't so good. So in the UK, Oak North, which is a SME mid-market lending-led proposition bank, they are our only profitable unicorn. And that's a great story, 33 million, I think, last year. But so not hugely profitable. But for a startup digital organisation, that's a really good story. And their model's different as well. It is a bank in the UK and then licensing their AI platform and technology to other markets. And I think that's the other part of this. Are these digital banks setting up to be digital banks, or are they setting up to be something more pervasive across the ecosystem? And Starling Bank is another example of that.
Right. So, Sam, just reflecting on the Hong Kong narrative, right? Given that narrative has been in motion for a while now, and obviously with any narratives, they go through their own highs and lows. And if you look and reflect on the winners through that process, most of them were large tech companies in that journey. Most of them had linkages to China. And when you look at the current situation in Hong Kong and the sentiments there, do you see any challenges for these 8 new virtual banks that are coming in, whether from a talent perspective or other narratives that are being played out in Hong Kong?
Yeah, so I think there's a few things we see, and look, in the next quarter and two is when we'll really start to see this come to bear. I think if we look broadly at the virtual banks that we're seeing in Hong Kong, there's a couple of different flavors. There's one who have built and deployed exactly the kinds of solutions across the border in mainland China that they can now bring to Hong Kong in a very replicable fashion. And then there's another camp, which is these interesting partnerships with retail, with retail firms, with other established Hong Kong institutions that can bring more innovative solutions, but where there's also a lot more work and thinking to do to figure out what do those innovative solutions actually look like, right? And so I think, look, to make the investment into Hong Kong for these virtual banks, they're clearly taking a longer term view on the opportunity here. And so you see that when you talk to a lot of them, that yes, it's important for when they go live, and yes, it's important for what they launch, but fundamentally, there is a reasonable degree of focus among most of the virtual banks in terms of, yes, this is fine that we're going to launch with this product or this offering, but fundamentally, we're going to take the first 12 months and 24 months to figure out these host of things in order to actually bring the innovative solution. So I think that's one thing we're seeing and hearing, which is encouraging. Two, and just to the comment earlier on compliance, right? In different conversations, certainly hearing different things from the different VBs in terms of how much new work and thinking there is to come up to speed with what is now required of them. And where that does exactly hit, as you alluded to, is with compliance and with the teams in general. But the war for talent in Hong Kong at the moment has become fiercer than it was, in the sense of not a massive talent pool in the digital sector to start with, and having 8 new firms, all of whom are chasing very, very similar profiles, has certainly made this an interesting and challenging time from a recruiting and retention standpoint across the Hong Kong market as a whole.
Okay. So that's helpful, right? Because as a narrative, because as this journey scales up across most of the markets, we saw the Taiwan market launching, giving out 3 new licenses and so on and so forth. Clearly, this pace up is for talent is going to increase. But the other point I do want to call out is a consortium-led play in Hong Kong. If you look at tech-led consortiums with offline businesses like retail, etc., that came together to formulate that story. Andy, can you share with us, especially when you look at the 4 to 5 businesses that won these licenses, what was the difference in terms of these archetypes in Australia? Tech-led consortiums with large offline players, or standalone, and what's your view on that?
So what you've seen in Australia is 2 things. In fact, the 4 I referred to earlier who've got the new banking licenses are all ex-bank startup founders who've partnered with technology companies to bring the proposition, or built some of it themselves, but on the whole have partnered with people to do it. There is one, though, that's called Up. That's the opposite way around. That was an existing bank that partnered with a technology company to build a banking proposition on the back of an existing license. And I think you're starting to see some of the others wake up to that idea now. So instead of trying to transform their existing large legacy banks in Australia, 1 or 2 of them are starting to build an alternate digital bank, which I suspect they'll look to migrate their masses of customers into in time. So it's interesting as you see different people plot their journey through this. I think the winner here has got to be the customer. It's increasing competition. I think the trick is you've got to stand for something different and really be true to that. I think we, as an example, are really focusing on putting the customer right at the heart of this and looking as to how we can change and transform the word trust. With the amount of data that you have got access to, you should be able to help them make the right informed decisions. And our purpose around helping people make more of their money, we're in a really good position to be able to do that, which I think starts to transform the reason we're doing what we're doing. Now, it's a long-term play, but you've got to stand for something. You can't be a neo that's just the same as the others were. You've got to be different.
Andy, can I just build on that? Because that's exactly what's happened in the UK market. We had the stimulation of digital banks starting up. That stimulated the competition, which is what the regulator was very much looking for. And we've got incumbent or heritage banks, as I like to call them, starting up their own digital offerings. So with HSBC, they're launching Iceberg, not under that name, but that's what it's known as at the moment. And that is an SME digital bank seeking to go after non-HSBC customers. You've got RBS in the same segment launching Metal, which is an offering to the SME banking. And I think you're seeing this focus on the customer, and the competition has done that, put the customer right at the heart of this, so that they've had to recognise that trying to transform a legacy technology architecture to get customer focus right is too hard. And they're going to have to go outside, so the outside business model, to be competitive with the other banks starting out.
And I just echo that we're really seeing signs of that in Hong Kong as well, where we had the open API framework and that was there, but fundamentally I think similar to the UK, it moved slowly in terms of adoption, and there's a lot of work involved for that. Having the virtual banks around the corner of actually offering competitive services is a very different kind of competitive energy for the traditional FIs. And so we've actually seen that be really encouraging. And in the way that we've seen that come through is, traditionally we've partnered very closely with the FIs that invest very heavily into digital to launch new digital journeys, and that's been great. But fundamentally, that's 10 or 20% of the financial institutions in a market, and most of the rest are not nearly so far down that journey. And so we've just launched a new business we call Ecos Connect, which is fundamentally just around that, which is saying there's such there's such hunger from the broader FI community in Hong Kong now to say, okay, there's digital insurers, there's digital banks, there's open APIs. There are some banks that are investing very heavily into this on their own. So we need to catch up, and we need to be there playing alongside them. And so that's what we see as a really exciting trend, which is the focus on the user, to recognize that everybody has to do it now because the competitive tension is there. It's not a should or a, you must do that from a top-down perspective. It's just, look, new offerings are coming to market, so let's all catch up, which I think is going to be great for the ecosystem.
Right. So if you see a lot of these markets, they come with different pedigree of incumbents. Some markets have a lot more digitally sophisticated incumbents compared to others, right? And sitting in Singapore, where you pick a bank and there's some award they have won. And I'm curious, Wendy, from your perspective, when you look at this narrative of digital virtual banks that are going to kick in through the process that's being run, and if you were to pick, here are 3 or 5 things that need to be true to make them successful. What would those 3 to 5 key things be?
So this is for Singapore, right?
Yes.
So again, I'll make the point about when we don't have choice versus when you have choice as a customer, quite different. What needs to be true? I think that the existing banks need to not overcome themselves, if you like, and have a new start of competition, right? I think our banks today here, I was talking to some of our DBS, and obviously I know Citi also, and they are looking at the space, right? Just as maybe you sort of see that happening in Australia, but when they're fighting for their market, they're going to do some things different, and they actually know banking. So I think what needs to be true is whether they are able to overcome some of the challenges that they have, different models, if you like, and being able to transcend that. I think their ability, to attract a new type of talent. I think we've got, banks today are attracting a new type of digital banking, staff, if you like, a different mindset, but they obviously understand how to manage risk and compliance extremely well. So if they are able to, again, transcend that, and be more like a tech innovator, right? And they've got different models of doing that, and you've sort of heard that all around. I think that also needs to, again, be true, for them. I do think that in some ways our banks, our traditional banks, probably need to really think about what is their core IP. I know that we live in an IP open world, but again, Tesla and Elon, he has got his core IP. Everyone still has to actually understand your value proposition that only you yourself and your organization can actually bring. So if our banks can't actually understand what it is that they bring, and what they're contributing to the table, I think that's going to be an issue because everything else is open apart from what I think is actually the essence and your core. And then lastly, I think it's also thinking about, their assets in what is marginal costing versus full cost, right? Because again, I'll take what Louise is actually saying. I think sometimes we go into our banking products as everything being full cost rather than here's an additional marginal cost that we actually are bringing to get that additional customer. And I see some of those conversations actually happening with our traditional banks, thinking about these virtual banking propositions in a very different way. You've already got the infrastructure, but again, to add one more customer that might be maybe higher risk, but again, that costing for that product and that customer may actually be quite different to how you think about your core parts of your bank.
Right. Sam, your views, given you have a running business in Singapore, as you reflect on the pedigree of banks, incumbents in Singapore, what do you reckon would be sort of 2 or 3 things that need to be true for the various applicants that might be successful in the process to ensure they deliver on their ambition? So what needs to be true for the digital banks that'll come out of this process so that they can deliver on their ambition, given the digital intensity and the capabilities of banks in Singapore?
Yeah, I mean, I think broadly, just to echo the other panelist points, I mean, I think it's, are we actually solving something new for the user, right? And I think that's where the consortiums can be interesting and where the process that MAS is going through in terms of very clear, views as to what is unique here, why I think that actually has a lot of merit, though it's, an involved process, is because I think there's enough digital innovation in Singapore amongst the existing FIs that just coming in and saying we offer a slick user experience and a nice brand and we're generationally targeted and these kinds of things is not sufficient. The question is, are you actually solving a unique problem, right? Are you actually putting the user first in a way that the user can tell the difference, right? And helping them actually make better sense of their finances, right? And I think our view is, frankly, digital bank or not, just in general, as somebody that engages with the user around their finances, it is a very high bar in terms of if you're actually putting people's interests first and helping them make better decisions and helping them build their right portfolio of products, then that's a terrific place to be. But that's also a high bar, and it's a hard thing to do. And I think this is a market where the fortunate thing is if you do that well, you can actually earn a margin as well and build a real business. But I think I would imagine that the test will be for each of these, when you're going to users or to consumers that already have a lot of relationships with established banks across the market. What are you bringing that is actually unique and different that actually helps the user solve a problem that an existing bank was not able to? Because the way we will approach this as we engage with our users is saying, well, here's what all of the existing FIs can do and how they can help you, and here's what a new digital bank can do and how they can help you. And so the question is just factually, when you look at the offering, is it actually better for consumer? And if so, it'll do great. And if not, then it'll be a lot of marketing dollars and a lot of investment and an unclear result.
Right. And maybe good valuation.
And a good valuation.
Andy, sorry, please, Louise.
I was just going to build on that. Were you changing the question then? No. Okay, sorry. With the slightly more mature market in the UK, I'd say there was 2 things that digital banks, virtual banks setting up, from the lessons we've learned, are really important, in addition to what's been said about putting the customer right there. The first one is purpose. And we heard this morning a lot about purpose. Why would anyone go into business to do anything? And the integrated P&L. And I think a new bank coming on the scene, and so many of them are purpose-led, but I think that's really important. The other one is the tension between a passion to be wholly customer-centric and really focusing on the customer, and also balancing compliance and risk and financial crime responsibilities that the heritage banks are very good at and have kept us very safe for many, many years, despite some of the trip-ups. The newer banks, the passion to get out there and serve the customer without the capability in the more sort of back office functions, I think is something that they really need to have sorted.
Right. And especially on that point on the back office functions, right? When you look at the talent sourcing approaches, and you've got the big banks in Australia coming on the back of the Royal Inquiry. You've got 4 new licenses being issued out. What are some of the interesting plays that you see banks making to ensure they get top domestic and cross-border talent to be successful in this new world?
Yeah. Picking up on the last two questions and combining them, if I can. When, the word tension has cropped up a couple of times, and I feel it every day. The tension between wanting to be different and the tension of having to conform. The tension of that's right for the customer versus I can't do that because I need to bring the P&L through somewhere. But I think, one of the things I really think we have to get right are some of the dynamics around existing customers versus new customers and the way we consider the service we're offering. So banks traditionally have thought through the lens of products, whereas I think we've got to start to think through the lens of the customer themselves. So the longer the customer is with you, why can a new customer get a better price? That's an example of surely that can't be right. The more value a customer brings to you, then surely we should be able to price them better through bundling, and not bundling that's looked on as suspiciously, but true bundling that's adding value to customers because they bring value to you. And the whole notion of loyalty, the longer they're with you, then I feel we should be able to reward that better. And risk-based pricing. So I agree that the bottom end of the market is where banks traditionally have made most of their money. The customers that can't afford to repay the credit card or the customer that defaults. Well, if we're really clever around how we risk assess and price, we can encourage more people into that market. So I think there's a bit of a social responsibility that we can play here to stimulate the market and think about the whole thing very differently to how it's been thought before. In terms of talent, that's the challenge, because what you've got on both sides, we've been through sort of the tipping point. We started very techie. And of course, the closer to the license you get, and in fact, trying to get the license, you need to become very compliant and very banky very quickly. And now you've got the license. To keep the license, you've got to be very sure you're on top of regulation, on top of what's happening around risk. And so inevitably, a deluge of bankers have come in. And you can feel the difference between the company and the culture as it started to the one 50, 60 people later that's been through that tipping point of balancing between risk and technology. So I think we started as tech fin and we're now balancing more towards fintech. But we've got to get back to the reason and keep driving the reason we're there, and that is for the good of the customer and to shake up the banking industry. Otherwise, we'll just become the same.
Right. I'm just curious, wasn't this movie played in the world of telcos many years ago when the big asset-intensive businesses, using Lewis's word, the heritage banks or the heritage telcos, and then came the era of MVNOs who said, oh, they're not client-centric, they don't have a better user interface, and look where the MVNOs are. Not in many markets you can claim in the list of top 3 telcos or mobile carriers, MVNOs are in those top 3. So I'm curious, Wendy, asset-intensive business, regulated business, the MVNOs came with the same story. I'm curious, why do you think this story is going to be different this time, or will it not be?
I think it is different, and I think there are 2 aspects of it, right? One is it's banking versus telephone or wired broadband, whatever data service, right? So one is actually very fundamental in our way to protect. Right, so the regulatory, even though I think telcos are, their regulatory environment, is probably second to what banking does. Banking is different because it's my mom and dad, my children. We're protecting our future and our income. So it's a level of compliance and risk taking that we're not, we want to be assured with. Number one. Number 2, I think our MVNOs, they reuse infrastructure because infrastructure is so flipping expensive to build, right? So they did the customer service and the channel and the touch piece at the top, but they didn't have to really build new infrastructure. They are the models that I think we're trying to actually get through with banking, but banking was able to be disrupted first with payments. very little infrastructure, I'm going to say, compared to, again, a full bank, right, a universal bank. And so it started that way. We all thought banking was relatively easy because we thought payments was a bank, but it's not, right? And all the way through now. And so I think that, should I shout? I can shout. So I can shout. So I think that's the major difference. Only got hit words. Hello. Yeah. I'm not going to say anything. I need to get up so I can project. So I think that's where I think it is different. But maybe we are going to learn because I think that the ecosystem play for new virtual banks I think is really interesting. And I don't think it started off that way, but I think it's definitely going to be there. We're going to bring people with the right competencies. And this is where I keep on going. I think all of us who are interested in this place, in this space, needs to actually understand what do we bring that's different. It's not because we were first. It's not because we've got the fancy tech. But what is it that is actually unique and you're going to bring to your players and partners a different proposition? And I just want to again, Andy's story. We've been seeing that in Hong Kong. Right, the clash of cultures where we've had technology giants that are agile, cult of done, all the things that we love about being new and light. But when we have banking, it drags us all down again, and they can't. Then they have to get traditional bankers to come in to actually help lead some of their, banking products. And it's been, again, I would say from an outsider, it looks horrible because the two parts doesn't actually work, and they've got to find a third way that actually better blends. And I think that's the whole story too with the telcos.
I think the build on that is the lack of an even playing field. So the tech companies doing banking services are not regulated in the UK as banks. So you're regulating the activity, not the entity. And they're competing with banks who are regulated as an entity in our senior manager regime, and some of those obligations come in, which make it an unlevel playing field, and I think the regulator has to look at that.